Hello there, and welcome back to No Reservations. Kasey Anton, my guide to restaurant success, or how I see it anyway. And who am I to think I know anything about restaurant success? Well, I've been working with restaurants for many, many years. I come from running, working in every position, and eventually owning my own until I sold them back in 2007. And ever since then, I started a consulting firm. We do bookkeeping, accounting, consulting, and coaching for several industries, but our number one division is restaurants. So I have been in a front row seat to how many, many, many restaurants operate. So I definitely am someone that can tell you about what works and certainly what does not work in pretty much any type of restaurant, bakery, cafe, anything food service related. So, this episode, though, is about navigating challenges, overcoming common hurdles in the restaurant business. And I think that this particular episode, the lineup of this episode for today, lines up really well with what I have been dealing with a lot over the last couple of weeks. I mean, pretty much for the last 15 or more years than that. But over the last few weeks, we've received many leads and new clients, prospective clients, but some new ones have already signed on as well, that all came to us because they were struggling, because they are challenged, they're having challenges. So I've really been in the thick of fixing. Really, I'm the fixer, the Ray Donovan, right? The fixer of business challenges. And they pretty much every single one of them boils down to the same exact thing, which is cash flow. But how do you fix cash flow? You have to understand your business model first. And then if you put profit first over the top of your business model, it will ensure that your business model works. Okay, so what do I mean by that? Because I think at this point, people are like, what are you talking about? Well, and all of this is in the book, by the way, not to make this a giant sales pitch for my book, but it is all in my book. So if you want more details or examples of what I'm talking about, I really fixate on this throughout the book because it is so incredibly important. And it's probably the number one thing that I come across when I'm working with restaurateurs and just small business owners in general, is not quite understanding their business model, which is basically if you had projections or a business plan or a budget or anything like that kind of set maybe before you started your business, when you were looking for funding or writing your business plan, or maybe you didn't do that and maybe you did it later on when you met with somebody or just decided doing a budget or projection was a good idea. But that's what I'm kind of referring to. And if you don't have that and you've never done that, welcome to the club, because I think of the last 10 or 15 restaurateurs that I've been working with over the last couple of months, I don't think any of them had these. So it's very common to not even have a business plan or a set of projections. Or if they did, it was 20 years ago and they don't even know where it is. But that's kind of what I'm getting to. It's basically, how did you plan to make money in your restaurant? What was the goal? How were you planning to do it? If you're a food truck, I'm hoping with the food truck, right, you knew what your expenses are with the food truck. You knew what it cost you if you took a loan out for it. You know what you needed to pay yourself if you were going to make this your full or part-time job. And then if you were a burrito truck, how many burritos were you expecting to sell? And what did you think it was going to cost you? And then when you minus your costs from the sale of those burritos, what was left and could it afford your expenses, right? So basically what I'm talking about is your P&L. I'm saying, what were you thinking your sales might be? Then what were the costs associated with those sales? And let's hope you have that. And if you don't, let's get it. What is your food cost? What is your beverage cost? What is your direct payroll cost? Okay. And then what are all your other expenses? And how are you going to make money? That's really what I'm getting to when I'm talking about your business model. How are you planning on making money? So for an example, I'm working with this small restaurant group right now on the other side of the country from me. Really interesting. and looking at two of their restaurants kind of side by side. Very different concepts, but very similar in size and style, just different cuisines. Um, but one of them is doing great, or so the numbers are showing us. One of them is knocking it out of the park and really, really making a lot of money. And the other one is struggling tremendously. So right now we're working to make sure that we're actually comparing apples to apples, right? Making sure the numbers are accurate. But what's the difference between why is one restaurant doing so incredibly well and really knocking it out of the park with their food costs, their beverage costs, their labor costs, and low overhead, and the other one has a great food and beverage cost, but their payroll is absolutely through the roof and all the other expenses are okay as well. It's really just the payroll. So what's the difference? Why does one have huge payroll? Again, different concepts, but similar in size and scope. It's similar that way. And one of them can't. Like, it's simple as that. What's the business model there? So that's the first thing you have to understand. How did you plan to make money? And to boil it down even further, if that's still confusing, there's a case study and an example that I really dive into detail in the book, and also it's in the workbook, where I talk about a burger shack, a burger restaurant in the Midwest that their number one seller was a cheeseburger and fries, and they were losing money every single time they sold one. Because they assumed somehow down the line, they'd been open for 7 or 8 years, I think at that point, they just thought that they were running like a 32% maybe food cost, so that the cheeseburger fries would fall under that. But when I had them do the menu costing exercise of that actual plate, when somebody walks in and they buy a cheeseburger and fries, what are they paying and what are they getting? And I had them detail out everything on that plate. It was a 57% food cost, which for them, with their expenses and their debt so high, is a loss. Every time they sold them is a loss. They needed to stay at 30% or below on their food, or they were going to lose money. So the more they sold, the more they were digging themselves a hole, and that's exactly what ended up happening. So that whole story is in the book, but you get I hope you understand the example is, you really can't go into business in a restaurant and have a very high food cost, a very high beverage cost. You're going to have high labor and expect to make money. It just doesn't add up. So that's number one. That is probably the biggest challenge, is not having enough money or not understanding your food costs. So in that example I just gave of the 57% cheeseburger plate, you need to really understand where you're losing money in your business. And the way that you can do that, to understand that, is by doing a profit assessment, as is in the book and in the workbook, right? Which is really looking at your P&L, making sure it's right, and knowing what your food cost is, your beverage cost is, your labor cost is. Those are your prime costs. Making sure that those are right and where they are. Are they 30 or around 30 for food and beverage? Is it 30 or around 30 for labor? Right around there, then okay. If those are right around there most of the time and you're still losing money, then we need to look below the line. And those are your other expenses. Those are what we call your, I'm just going to look up how I have them, administrative or admin in general expenses, right? Your bank service fees, professional fees, things like that. Your advertising and marketing, some restaurants have very little, some have a lot. So we need to make sure that's in line. Are you spending too much money on advertising and marketing? Then direct operating. Can also be out of whack. This could be flowers and decorations, linen and laundry, anything that you're spending in the operations of dining, of selling the food and beverage. That's kind of direct operating. Is there too much of this, or too much glassware usage, things like that. Then there's occupancy, which usually, after your prime cost, is usually the third highest area, your occupancy. And occupancy, what I mean when I say occupancy, because this has been coming up a lot, is you want to have all the expenses associated with just the building or the shell or the storefront. So that's going to be rent or mortgage if you own it. So it's going to be rent. It's going to be your utilities. It's going to be any property insurance, or anything, any CAM fees, common area maintenance fees, pest control, telephone that could fall under utility property, internet, repairs and maintenance on the building. So anything to do with the actual, like turning on the lights and opening the door type, the shell of the building, that's all under occupancy. And we always want to see that. I mean, general rule of thumb is 10%. Your business model might be different, but overall 10%. And sometimes when we see that getting to 15% and above, you're not going to make money. It's going to be too hard. So that's something else to look at. And the last area is the owner's pay and personal expenses, and which should, it may not even be on the P&L. If you're an S corp, the owner might be on payroll, which they should be. It's the whole point of being on the S corp, which is great, but only for a certain amount. And then the rest might be distributions, personal expenses that running through the business, whether on purpose, by accident, doesn't matter. If those are on the balance sheet, you still want to bring them over to kind of see how they're taking care of your profit, right? So your profit was one line item, and then all your balance sheet activity has to come off that profit to really show you where the money's going. So anyway, I want to back up there because this is not a lesson and learn on P&L at all. This is just about challenges. And I have to say, in all of the restaurateurs that I speak to on a regular basis, the biggest one is figuring out where their money's going, why there's never enough, or why they're not profitable, all of the above. And those are the areas you need to look in. And in order to be able to look in those areas, you need to make sure that your P&L, your profit and loss, your income statement all mean the same thing, that is accurate or close to accurate. As a matter of fact, I had an email from a client this morning that was really, really like spending time like nickel and diming everything. That is not necessary at all. I think there's just bigger, more important things to do than nickel and dime everything. We just need to have a really good general idea of what your expenses are and in what category. Is it food? Is it beverage? Is it labor? Is it a below the line expense like an admin, direct operating, whatever? We need to have a good idea of that. Do we need every penny to line up? No, not yet anyway. We can get to that later. We just need a good idea. So if you are doing your own bookkeeping and you're not a bookkeeper or an accountant, chances are you need to invest in that, because I am finding time after time, and this is going back years, that business owners who try and do it themselves to save money, or maybe because, they're control freaks, which is great. I'm a control freak, so I'm not something against control freaks. I'm one. But they're control freaks in that way, and so they feel like they have to do it. But the thing is, if you're not doing it right, in 99.999% of the time, you're not. That's just flat out experience of me seeing people trying to do their own bookkeeping. It's not for everyone. It does require a certain skill that is learned to understand a balance sheet and a profit and loss income statement and how the two relate and how they do not relate. So if you don't have that skill set, and no one's expecting you to as a restaurant owner or any other business owner really, then it's so worth to invest in somebody that does. Because otherwise, you might be spending all of your time. And this is, by the way, what I did in my restaurant when I was not an accountant or a bookkeeper at all. I spent all of my time trying to figure this out, hours and hours, missing what's really going on in the restaurant. It was a big mistake that I had made. It turned into something that works for me, because now I have a great, thriving business that helps other business owners do it. But it was a mistake that I made in my restaurant. So I implore you, as business owners, as restaurant owners, if you do not have your own background in bookkeeping and accounting, do not do it. Make the investment. It's not a huge one. It's usually somewhere between 1 to 2.5% of gross sales. So you could get a cheap bookkeeper for about 1% of sales. It is worth it, because you need to look at these reports. They are a tremendous tool for you to understand, but they have to be right. Because if they're not right and you're using them to make decisions, you'd be making all the wrong decisions, which could just create more problems. Like the Burger Shack that I mentioned, that was doing their own bookkeeping and thought that they were running a great number in food costs, and it turns out they were not, and it was actually digging a grave for them. So do that. Make sure you understand your P&L the way it is. If you can compare it to your original business model, or projections, or a budget, or anything you had in mind where you thought you were going to be profitable and what that looked like, compare that to your actual and see where you went wrong. See where everything went off the rails. Was your food cost way too high? Is it just simply your sales aren't there? Or is your labor cost through the roof? That's usually where it is. Or was your occupancy way more than you thought it was going to be, because you never really thought about it before? So understanding those are the big areas. So P&L, hiring a professional if you don't already have one, looking at it, comparing it to where it should be, what your projections were, your budget was, what you think you should make money, focusing only on those areas to fix them. If it's in your food costs, do a menu cost. We have a free calculator on our website you can download to do it, but it's actually pretty simple. Add up all the ingredients on the plate. Again, doesn't have to be exact. If there's ketchup, salt and pepper, if there's a sauce, whatever it is, assign a value. Maybe it's 40 cents, maybe 50 cents, maybe it's $2. Assign a value to that and to everything on that plate to get a rough idea of what it cost you food-wise to put that on the plate, and divide that by the sale price to get your food cost percentage. Again, there's a free calculator and instructions on how to do this on our website, which is profit first for the number 4, profitfirstforrestaurants.com/tools. So profit first, the number 4 restaurants.com/tools. Lots of free stuff on there. But the menu cost calculator to get on there, and I would start with taking your top sellers, of course, what sells the most, and running those through the calculator. This exercise should not take you a long time. By the time you download the calculator, it might have some of your vendor invoices near you. If you need to look up the cost of the chicken per pound or the beef per pound or whatever it is, have that. But overall, it could take you 10, 15, 20 minutes maybe to do that for your number 1 selling, and figure out if there's a problem there. If your biggest seller is actually putting you in bankruptcy because it's costing you way more than you thought. And once you know this information, it's great. I mean, you might use it as a reason to kick yourself for not knowing it sooner. Fine, do that for 2 seconds, then stop, because now you can fix it. Now you can raise that price, or look at the portion size, or source something different for that plate, or remove it altogether. Hopefully not. I mean, if it is a number 1 seller and you find out you're running like a 60% food cost, whatever, I don't necessarily want you to remove it if that's what people keep coming back to you for, right? I want you to raise the price, number 1. And is there a downside to doing that? Of course there is, but that could be mitigated. It can be. And by the way, the rule of thumb, and this is true. I actually discovered this myself. If 1 in 10 people, so about 10%, are not complaining about prices, your prices are too low. If that is a fact, it is across the board. So it's okay if people complain about your prices. If half the people are complaining, that's a problem. But about 10%, look for that. If they're not, if no one's complaining, you got room to raise those prices. So you're looking for 10% to complain, because that's when you know that your price is right, because people will always complain about prices. But any more than 10%, you might have an issue there. So raising prices, and who doesn't want to raise prices? That's money in your bank account if it makes sense to do so. So that's my fine print. That's my caveat. If it makes sense to do so, raise prices. How do you know to raise prices? If people aren't complaining about them, and if your food cost is not in line. Same, of course, with any beverages that might be selling a lot. You can do that. Then the next one, and really the last one, because everything else you should be able to see are accurately in your P&L. But the next one is your labor, and that's kind of what I'm in the thick of right now with a client who says, listen, I need everybody. I am already cutting way back. I need everybody who's on my schedule to work. Okay, so let's take a step back then. If you're telling me that you're scheduling bare bones, the minimum people, maybe it's 1 cook, maybe it's 1 dishwasher, maybe it's 1 or 2 servers, and a manager, maybe it's a bartender, whatever it is, whatever is your minimum requirement, and you add that up, what they cost you, and that amount is not hitting 30% based on sales, you've got a problem here. You got a problem. And maybe that problem is 100% about the sales, and it rarely is, but maybe in your case, it's 100% about the sales. And if it is, well, then now we have a focus. Okay, you need to get those sales to this level in order to make your bare bones labor at 30 or 35%, whatever it is for you. 30 is usually the average. Maybe you can go to 35% and still be profitable. That's okay. So you can figure that out on your own, understanding what your P&L is, right? Well, just for this example, 30%, we need to get there. The second part of this exercise is, I'm not saying to get there tomorrow, although who wouldn't love that, but understand every day that you're not hitting 30% or 35% on that labor cost, and that cost is too high, that's costing you money. And that money will come to you in the form of debt. That's a debt, whether it's a loan, a line of credit, money from the owners, because the owners aren't either paying themselves or they're backfilling their own money. However that money comes, maybe it's in credit card outstanding debt. That's what that is. And so you need to decide how long you're willing to go at an extraordinarily high labor cost, knowing that you're going to incur debt until you aren't comfortable with what that number is anymore. So you just need to know that information. Maybe it's 3 months, maybe it's 6 months, maybe it's a year, maybe it's 3 years. But you can do the math and figure it out. If you insist that that is your bare bones, absolute bare bones labor, and your sales just aren't hitting it, and we're going to focus on sales, we're going to do everything we can to get those sales in, and no, it won't happen overnight, but how long are you willing to go? I would do this. I would say, well, let's say 3 months. Let's set a marketing strategy, a sales strategy in place. And I've talked about this in the book as well and in the workbook, but definitely in the book I go through what I did. Definitely helped my restaurant. Very inexpensive, and it worked. And I know it would work today. So how about you set 3 months? Say in 3 months, we're going to do all these things. We're going to implement this marketing and sales strategy and see if it works and see if we can move the needle up on sales to help our labor costs. At the end of 3 months, we're going to sit down again and say, how far did this bring us? Should we keep going? Did this not work enough? Do we need to do something bigger for sales? Whatever it is. Or did it work and is it great? Or are we going in the other direction? Instead, our sales keep declining. And that is a sad but very real reality. If your sales keep declining and you're running this bare bones labor, that's telling you something. That is telling you something. Because what can you do to turn that around? If you've already implemented what you believe is the best marketing and sales strategy you can do, and the sales keep declining. And it may not be it's probably not your fault at all, right? It could not be your fault. It could be anything. It could be your location, really, right? They say location. So it could be your location. It could be the concept is just not right for that area anymore. Or maybe it never was. Who knows? Or maybe it could be a million different things. But the rating is literally on the wall. If you know your numbers are accurate. You know what's wrong. You know the labor is too high in this example. Now you know the only way, because you can't cut labor anymore, otherwise you won't be able to sell anything. You won't be able to open the doors, right? So now you know this is only a process of I need to get more sales, and you implement a smart and trackable sales marketing strategy, and you do it. You give it everything you got, and your sales are still declining. That is telling you something, and that is a real conversation. What I'm very willing to have with you, if that is the case, I feel like I'm going down a really negative path, but I see this a lot, so it's why I wanted to bring it up. We can have a real conversation. I am here to talk to you about that. Just email me, and we can go through that. But I don't think that'll be the case. I think that is rare. I think once we kind of settle down, get our numbers in order, understand where we need to focus, and in this example, put the sales marketing piece in place, I think you're going to see a turnaround. Especially the one that I put in my book and in the workbook that really works, and it gets customers to fall in love with you again. And then it's a slow roll, but slow, I mean, over the next 3 to 6 months, you should absolutely see an increase, an uptick in sales, and then we can go from there. So that's it, really. The only other piece, the big piece, is the occupancy piece, right? But if you're locked into a lease, there, and you know you're looking at all your utilities and you're doing the best you can with the gas and the lights, the electric and all that, you're controlling it all you can, repairs and maintenance, you're making sure the landlord's doing their job or whatever. It's not a whole lot of control you have over your occupancy expense once you're locked into that lease, right? There's not a whole lot. But you should know what that is, understand what that is, because in some cases it may just be, hey, you signed a really big giant lease. You're only open at night. Maybe you sublease the kitchen during the day. I always know a place is looking to, make their delivery meals during the day, first thing in the morning, or make their jams or, their edibles or whatever it is, and could use a commercial kitchen that you could lease. So there might be opportunities there to help offset that occupancy cost. So there's that. So those are those are the biggest challenges I face all the time with all the restaurants. And I'm talking over the years, probably thousands at this point, but right now about 100 restaurants that we work with internally. I personally right now I'm working with about 6. Those are the challenges. Those are the hurdles. To me, they're very black and white. They are very fixable or they're not. But 90% of the time they are fixable. You just have to know what needs fixing and how you do it. And again, my book will absolutely help you do that. Profit First Restaurants. Of course, I'm going to recommend it, but I know it'll fix any restaurant. And if you don't believe me, look at the Amazon reviews. There's only 33 reviews. I think it's 33 reviews right now. And all but one are 5-star, which is great. And that 1-star review, I'm not supposed to talk about it, but honestly, I don't think they actually read the book because their review was not accurate. So it said I didn't believe in a P&L, and 100% believe in a P&L as long as it's accurate. But 99% of the reviews are 5-star reviews from people all across the world who said, this is the book, this changed my life, this changed my restaurant. And then I get calls and messages all the time about it. So I do recommend it in that way. But otherwise, just hang on to this podcast. I'm going to every 2 weeks it comes out, try and give you some really valuable tips to use. ProfitFirstForRestaurants.com has a ton of free information on there as well. And then you can always reach out to me and my team through that website or through sparkbusinessconsulting.com, and somebody will always get back to you. We're here to help. All right. Thanks so much for listening, as always. And do your thing for me, please. If you can share, talk about this podcast, that would mean so much. All right, guys. See you later.